Hello everyone, today is Friday, April 29th. My name is Evan. Welcome back to our weekly stock market analysis video series. If it's your first time tuning in, welcome. Thanks for joining us. Thanks for being here. Here's how these videos work. We break up our analysis into two parts. In the first part, we look at everything that went on this week in markets beyond price action. So we go into market internals and the term structure of volatility, and we look at correlations and interest rates. And we really just sort of pick apart things that look interesting, noteworthy, or influential in our understanding of where the current market is. And then in part two, we jump into the charts. We look at price action. We've got some key charts we're going to be looking at today in the dollar and oil. And then we finish off with some sector and industry movers, noteworthy movers, and overall analysis. So hopefully that sounds good to you. Let's get into some of the takeaways from this brutal week. Now, the takeaway on the kind of headline here is we had a very busy week of earnings. We had the heavyweights reporting, so the big FANG names, the top 5 stocks that basically rule the indices in terms of their exposure to it. And the reaction of the market was basically more puke lower. We saw new lows across the board. We saw ranges expand to the downside, and we saw indices as a whole down about 3% on the week. So lots of really nasty action out there. We did see yields finally stop going up. So this was one of the first weeks we haven't seen the interest rates continue to creep higher. We'll see if it's a 1-week pause or if we've got some kind of change of momentum here, but it's notable, and we want to talk about that a little bit later. And then we saw the US dollar put in a very big week to the upside. Up is not new, but the magnitude of this week's move was certainly noteworthy. We're going to look at that later in this video as well. So let's jump into the numbers here. If we look on the right-hand side, you can see basically 3 to 4% down across the board. This is a sea of red. 1-week numbers, 1-month numbers, 1-year numbers. Everything in here is painful and to the downside. We can see this week specifically Russell 2000, Nasdaq 100, biggest losers at basically 4% lower. Now, if we look at our bigger picture trend analysis, so we always look at this view here just to get the big picture. We've got our custom smart trend filter on here. That's what these dots represent. And we are seeing prices just really avalanche lower. We've got red dots printed everywhere, which is our sell signal in this trend model, except for the S&P 500. Remarkably, this is still yellow. This will turn down pretty much immediately on the open. The prior signal is a sell signal here, so it's not a gigantic difference, but it did show that there was some hesitation up here over the past couple of weeks. But basically, from this weekly perspective, there really wasn't any change this week. We were in this decline. We had sell signals either printed immediately or previously, and that was guiding our bias to the downside. So no surprise, no changes there. If you are a TC2000 or a TradingView user, you can get this indicator on our website at thetraderisk.com. Now, if we take a look at market internals here, you can see another disaster in terms of data points. If we look at the top row, NYSE net 52-week highs minus lows, you can see triple-digit numbers all across the board here. Every single day this week, about 400 new 52-week lows being made, 2,300 on the week. That's a very dismal number. In some cases, that's actually getting close to some washout numbers. You can, in fact, get up to even 800, 900, 1,000 52-week lows made in a day. That's usually when you get the really extreme washouts. So we're not quite there yet, but certainly the consistency of selling here is notable. NYSE cumulative AD line, you can see basically negative across the board, fares a little bit better Thursday, of course, but still a bad number. And then if we look at the number of stocks over a 20-period simple moving average in the S&P 500, we're down to about 11%. So these are getting to very oversold, very hated sort of markets in the short term. If we take a look at this chart, this illustrates nicely the extreme sort of nosedive that we've seen now going underneath the hood of the market. Again, looking at those NYSE 52-week highs minus lows, you can see essentially the magnitude of get me out of this market, sell everything is picking up to the downside. So this here, more indications that there is a tremendous amount of fear out there, and volatility is screaming the same thing as well. Take a look at this blue line. This is what we call backwardation. The front month VIX is now trading loftier, higher than out into the future. So you basically have the immediate month VIX is going to cost you more money to hedge if you're going to play in the options market or even speculate. It is going to cost you more for the next 20 days, 30 days of trading than it would in terms of premium, than it would if you go out 3, 6, or 1 year. That is a direct sign of fear and tells you a lot about the type of market environment that we are in right now. If we look at sector performance, you can see it was red right across the board. Not even the staples could save us this week. We saw materials actually and technology, believe it or not, at the top of the list here, along with energy, only 1% down. If we look at the downside here, consumer discretionary 7.36%. You can thank Amazon for that as it dragged it down after reporting its earnings. Real estate was down 5.61% and financials down 4.42%. But some very big negative numbers here across the board. Now, interest rates, like we talked about at the top of the list, they actually did not rise like we've seen very consistently week over week. They didn't actually retrace a heck of a lot. They were retracing more at the start of the week, but towards the end, we could see down just 1% here on the 5-year yield. 10-year yield was down slightly as well. 30-year was up, but generally this is telling us at least, maybe the market has priced in enough. Maybe that momentum is slowing a little bit and we could see some type of digestion or pullback here. So something to certainly keep on the radar as we look ahead. If we take a look at the dollars, up almost 2% this week. That was a huge move. We're looking at this on the UUP ETF, but basically dollar versus basket of currencies doing very, very good. Again, dollar acts as a safety haven when you get periods of extreme stress. Gold was down 2%, silver down almost 6%, Bitcoin down about 3%, ag was down, but the oils here, so oil and gas, both staying in positive territory. Natural gas getting pretty jumpy here. We're going to talk more about those charts in a little bit. Last but not least here, I want to throw the correlations. So I did 1 month correlations here and look at all of the bright green and red here. This isn't anything new. So if you've been following these weekly updates, we've been looking at correlations and we've seen these very high correlated markets. And this is exactly what you see in periods of stress is you get risk assets, you get this risk on, risk off mode in the market. Everything tends to correlate and move together. And you're seeing the strong inverse correlations to what the dollar is doing versus what equity markets and risk assets are doing. And you can also see that play out with interest rates as well on the 10-year. So if we wrap it up with our positioning here, our trading systems, how are we managing? Well, we've got a lot of cash on hand for the most part. Merlin trading system, our longer term trading systems, 18% invested in the market. Part of that is gold. It picked up some gold late here in the week. So it does have a position in GLD and just a little bit of equity. So again, mostly cash, some gold, and then a sliver of equities. So basically it's saying, keep me away for the most part from this market right now. Our shorter term system's been, back and forth, long and short, but right now it is net long. It does have 24% invested. Again, pretty defensive, all things considered. It's not really that aggressive, and it's certainly selecting particular stocks on its long side. So that's how we are currently positioned heading into the weekend. We deliver trade reports nightly. Everything is automated here, fully rules-based, back-tested, and there are $1 trials available if you'd like to learn more about these trading systems, see if they can help you navigate this market. By all means, I invite you to check out the trial on our website, traderisk.com/trial. So with that, we'll be back here in just a minute with part 2. All right, we're back. We've got Warden TC2000 open, and we're going to dive into some price action analysis on the S&P 500. You can see this is the cash settled market, and this was our view that we've been using here, our high level weekly view of the goalposts of the important support and kind of bottom end of the range, and then the upper resistance top end of the range. So to remind you on those numbers, basically around just under 4,200 here in the SPY. That's what we've been looking at. That's where the market continues to find a bid over the past few months, and then it's been finding some pretty stiff resistance over around 4,600. And we've been saying on this longer term basis here that expect a lot of volatility in between here and range bound choppy behavior. And if you start to move outside of these goalposts, then you have a more meaningful, notable weekly move and trend that could be developing. And so when we look at the price action this week, we have now got the lowest weekly close going all the way back to, I'm going to zoom out even more. Basically, this is going to bring us to April 2021. So a full year. Basically, this gets us back an entire year where we are now making new weekly closing lows. A couple of things to note here. So yes, we did break below this 4,200 zone. We are now closing down for the fourth week in a row. So we've really just kind of fallen from the top end of this range all the way down here in a straight line. There was some chop in between. So if we go down to a daily chart, you can see that, we had a couple of periods here of chop. I'm going to change the board. So we had this range right in here. And you can see that we, went sideways for 5 or 6 days, had this loud outside reversal day, follow through lower, and then chopped around. And then, of course, you can see how we finished off this week. Now, technically, you could see we did make a new weekly closing low, right, down around 41.31. But if we throw on the daily chart, you can see we technically have not violated the low from Thursday, February 24th. That was, I believe, the day we had confirmation on Russia invasion, or we had intel drop or news drop on that. I could be wrong, but I'm pretty sure that was the event. So we had that very panicky open, and we saw that drive higher off of that open. So we haven't quite taken out those lows, but regardless, this is some pretty ugly behavior here. So this is a new monthly year-to-date year closing low, and we are seeing, especially on this Friday session, a big expansion in range and closing at the lows of the session. Now, a couple of things to take note of. First is we are at this critical spot. So this is a point where I'd be paying attention. And if you are of that longer term nature, you are sort of noting this 4,100 zone here. Maybe you're preparing your portfolio. Hopefully, you've either lightened up prior to this, or you've got some hedges on, or you haven't been fully exposed. But this is where things get a little bit dicey down here. Is the S&P 500 staying below 4,200 is a pretty dangerous look here. There's a big kind of air pocket down here, and we could really see that expansion lower happen pretty darn quick down to sub 4,000s. It's not a prediction. It's not meant to scare you. It's not meant to incite any type of behavior. It's just keeping an open mind and understanding how fear kind of creeps into the markets here. And if we start to lose these bids around this 4,200, 4,150 zone, then it just, again, gets dangerous with a VIX over 30, right? Like, it's not a pleasant market environment. And that is where you start to see some very, very wild moves. So that is certainly a possibility, a path that we need to keep an open mind about. The good news, the silver lining, what's the good news here? Well, the good news in my mind is that everything looks absolutely horrible. There is not a good metric out there. There is backwardation in the VIX. There are extreme oversold readings pretty much everywhere. Sentiment is pretty much horrible. Nobody wants to own stocks, or nobody thinks the market's going to recover anytime soon. And you've got the ingredients here for some type of bottoming process. Remember, the market is now down 4 weeks in a row. So this isn't the start of a move lower here. It has already been trading lower for 4 weeks. So you're not necessarily, if you're putting on new shorts right here, not saying it's a bad idea, but I'm saying you need to be able to manage risk if this thing reverses and starts to rip back higher. So the silver lining, as I see it, and I know it's a laughable statement, but everything looks so horrible that you could just get that move quickly in the other direction. And that's pretty much the only bullish thing I could point on, because price action, market internals, everything else looks bad. So when I'm looking at this market here, I'm paying attention to this 4,200 zone. I'm paying attention to the fact that we just closed lower. If we see a big reversal, if we see some gap up on Monday, if we start to, or if we see a gap lower and we pull one of these sessions where we exhaust down to the, sub 4,100, but then put in this big reversal and then get back over 4,190, 4,200, that to me might be a tradable bottom bounce reflex play back into this range. So not, again, saying that's the likely scenario at this point, but I want to keep an open mind about both situations. I just showed you our positioning on our two trading systems. So you can see currently that we have a lot of cash on hand. We've got a small foot in the door in terms of long exposure, but generally speaking here, we are very defensive, and we'll see what next Monday brings. So that's the way I'm sort of looking at this. If we look at the Russell 2000, so this is the big zone we were talking about, 190, 188, right in this zone, and you can see a clear cut below this. And again, it's the same comments I said about last week, and I sort of mentioned about the S&P 500, it gets very dangerous and scary below this 185. The longer we stay below 188, the more erratic this price action can get, and the more unraveling we can see here in a short amount of time. So be very cautious with these markets trading at these new one-year lows. If we do get that sudden reversal, if we get that big expansion move back over 190, then again, maybe you've got some sentiment washout and that bounce to play for. But for now, caution does apply. If we look lastly at the Nasdaq 100, you can see once again, new lows here, breaking below the February lows. This one clearly below the February lows, right? So this isn't like the S&P 500 that's technically still hanging on to the intraday low. Russell 2000, technically not hanging on to the intraday low. These are fresh lows for the IWM and for the Nasdaq 100. And again, weekly chart, really nothing to like here. This continues to expand to the downside, heavy volume, and again, not a new move lower, 4 weeks down in a row. So you're not catching a brand new short here if you're putting on your shorts. So that is really the high level price action analysis. Dangerous market out there, a high volatile market, and that tells me that you need to be prepared on both sides of the tape, really, on both directions. Now, let's take a look here at some other markets. I want to take the US dollar here. So the UUP is the ETF we're tracking here. Is basically the US dollar against a basket of currencies, heavily rated to the euro. You can see that we've been in this very strong uptrend. Take a look at this weekly bar though. So you've got this big, massive move to the upside here. Looks like, again, I'm not in the business of trying to call tops and bottoms. I think that's very dangerous, tough business to be in. I know some traders that do and can do quite well at it. But this, could be some signs of, again, kind of blowing off to the top here. We've got heavy volume. We're already up this is the fourth week up in a row, totally outside the upper Bollinger Band. And so this here, again, just gets me maybe a little more pessimistic on the dollar up here. And so again, put these ingredients together. You've got the dollar that is really accelerating higher. You get the market that is pushing the lower Bollinger Bands here and down 4 weeks in a row. Could be the recipe for some short-term reversion. If we take a look at the VIX, You can see we're back up to north of 30, so 33, not quite out of the above the March highs here, but still in a very, very dangerous territory. You can see it's covered a lot of ground in about 3 or 4 weeks, up 80%. So again, let's keep an eye on the VIX. Let's see if it can stay over 30. If it starts losing 30 early next week, again, that may be some early signs as well that the market is pretty well protected and may not continue to accelerate lower. Now, last but not least is oil. I want to talk about oil here. Let's take off these Bollinger Bands. I just thought it was interesting that we're continuing to see some very, very orderly digestion continue to take place here. Basically between, $72 and $80 in the USO ETF. You can see oil's been very comfortably trading in this range for the past month and a half or so, really almost 2 months if you factor in the early March behavior. And that's all in the context of this uptrend here. So I think this is going to be interesting. It's setting itself up for some type of directional move. We have yet to see if it's going to be to the upside or roll over. Keep an eye on that $82 on the upside. Keep an eye on around 71 to the downside. So that's all I want to go through for price action. Let's finish off with some of our industry and sector analysis. So this is a TC2000 layout we have available on our website. If you're a user, you can download this one. There's basically only 2 names or 2 sectors, industries that are showing up to the upside this week. We got drug manufacturers, so specialty and generic here. Big move to the upside. So clearly, on the heels of some earnings events, I don't know specifically what's happening here, but outperforming by a mile. And this here, which is tools and accessories, again, I don't know what this is. This is probably a small or sloppy sort of index weighting here or something that is driving the move. I don't know exactly what that is. I'm sure with some investigation we could see what's catalyzing this, or we've just got some total misprint here. So I don't know precisely what's going on with this one. But if we look at the bearish side here, I'm not going to go through all of these today just because it's going to take too long, but you can visually see this list, all the industries here to the downside. It's pretty diverse, actually. There's some real estate, some industrial, some tech, some finance, so pretty mixed here. And then take a look at all of the spider ETFs. So XLI, new lows, heavy volume, XLY, new lows, heavy volume, staples, just, again, heavy volume and reversing course. Utilities, breaking, pulling back and breaking down a little bit. IBB continues to break down. XLK. So we've got some real big broad sectors as well as some specific industries that are all notable to the downside this week. So that's it. That's what I have for this week. I'd love to hear your thoughts. What are you doing with this market? Is it bad enough that you are legging in or buying anything, or do you just think we've got a new leg that has started right now and we've got more pain ahead? Leave a comment below. I'd love to know what everyone is looking at this weekend and feeling. And as always, I want to thank you for tuning in every Friday, long form analysis video series just like this. Be sure to subscribe on our YouTube channel or stay up to date on our website. Thank you so much for tuning in. Hope you have a great weekend, and we'll see you back here next week.